Element number 6 is what I like to call the payment amount. Insurance companies use two primary methods to determine the benefit amount paid to your client. The payment amount will be either based on a known figure up front or is going to be determined at the point of claim. Now, if there's no cost for the extended care rider up front, charges are assessed at that point of claim. In this scenario, the company will set a maximum acceleration amount that's available to the client. The client may elect to request that entire amount or a lesser amount. The carrier will then base their charges on the client's life expectancy and current interest rates. For instance, they might determine your client has a life expectancy of 5 years. They'll take the dollar amount requested, calculate the interest they would expect to earn on that money over the next 5 years, and then subtract that amount from your client's benefit as their fee. With this type of payout calculation, it's really impossible for a client to know exactly how much money they will receive until they actually file the claim. Now, this does work well for clients who absolutely will not pay for a feature they believe they will never use, since there's no upfront cost for this type of rider. Now, if there is a charge up front for the rider, the benefit is going to be a known number. Most insurance companies express the monthly benefit as a percentage of the face amount. 2% is common, but some offer 3%, 4%, or even the full federal per diem amount as the monthly benefit. At least one company allows the client to name a specific dollar figure on the application. This method gives the client the ability to know exactly what to expect when they file a claim. Element number 7 is the payment method. Insurance companies pay extended care benefits by one of two methods, either reimbursement or indemnity. With the reimbursement model, the company will either pay the insured's healthcare providers directly or reimburse the insured upon proof of care expenses. The indemnity model offers your client a lump sum payment without having to provide an exact accounting of expenses. The insured may use the money however they wish. Some extended care expenses might fall outside the realm of traditional services. Maybe they want to compensate a neighbor or a loved one for providing care. The money could also be used to fly a loved one across the country or for their hotel and meals while visiting. If your client's expenses fall below the indemnity benefit, they could request a lesser amount, save the money, or invest the extra dollars. Element number 8 is inflation protection. Now, inflation protection is common on traditional LTC policies, but it's not commonly found on extended care riders. Some insurance companies do give clients the option to increase their monthly coverage at rates including 3% or 5%, simple or compound interest, but this is really pretty rare. Well, how else can we match the increasing benefit that's commonly found on LTC policies? One way to approximate the increase is to use an increasing death benefit option on a universal life policy. The death benefit and the corresponding extended care benefit is the initial death benefit plus the accumulated cash value. The increase depends on both the amount of money placed into the policy and the performance of the index account or the dividends declared by the company if it's a whole life contract. An increase in death benefit equals an increase in the extended care benefits. Now, the other option to increase the benefit amount would be to use the federal per diem amount as the monthly payout. With the per diem option, your client's monthly benefit is equal to the current federal per diem benefit amount, which is $340 per day in 2016. Now, the amount has traditionally been increased by the federal government an average of 4% per year. Now, even though that isn't guaranteed, it could mimic inflation protection. Keep in mind, the per diem monthly benefit does not increase the total amount of money available for extended care, just the monthly amount.